Disruptive technologies like artificial intelligence are reshaping the tech industry and beyond, and expectations are high for the tech sector this year. Joining me now to dig deeper into the key themes that will be powering growth for companies and investors in the year ahead is Pedro Palandrani. He's VP and Head of Research at Global X. So, Pedro, you and your team take a look at the major themes for the year in Global X's Charting Disruption Report. What are some of the big takeaways for investors?
Absolutely. Thank you for having me, Alexis. So clearly, the biggest takeaway here is that innovation hasn't really stopped, regardless of multiple macro level events that honestly we've had over several years now. And I think for investors, it's increasingly important today to think about innovation and how to capture those opportunities from an investment standpoint. And we believe that the markets are turning to be quite inefficient. If you look at the broad market indices, they tend to have significant overconcentration in just a handful of companies. Likewise, a lot of passive and broad benchmarks tend to look at history to try to have an idea of how the future is going to shape. In reality, that may be a little bit of an efficient approach, right? I think investors need to really try to understand what are the emerging technologies, disruptions, and even changes in people behaviors that are going to play out over the next 5, 10, 15 years, and try to position their portfolios ahead of all of those changes. So Charting Disruption is really trying to shed some light on all of these emerging technologies that we believe are going to shape our economies or our world in the next few years.
And talking about one of those big emerging technologies is generative AI. That has become the buzz of the investing community. So what disruptions do you see that are coming that will potentially fuel more growth and spur market leaders?
Absolutely. Clearly, generative AI, ever since the launch of ChatGPT in November 2022, has been one of those paradigm shifting technologies that we believe is going to clearly have a major impact across a variety of sectors. I think what's important to recognize is that artificial intelligence, generally speaking, is a general purpose technology, right? So you're seeing advances in the healthcare industry with drug development. NVIDIA, for context, is expected to generate in 2024 about $1 billion in revenue just from the healthcare sector, something that sometimes is a little bit underappreciated. So drug development, leveraging generative AI, of course, in areas like industry automation, whether that's in financial services, whether it is in this kind of knowledge worker setting, we're going to see a lot of advances from generative AI. I think for investors, the key question is here is, how do we capture that investment opportunity, right? So if we all believe that generative AI is going to increase the productivity for companies, for workers, how do we invest in that type of technology? And for us at Global X, we believe that there are going to be three major phases for this paradigm shifting technology. The first one, and one that I think the market already recognizes, is kind of on the hardware side, on the compute side. Again, talking about NVIDIA, I think the market recognizes NVIDIA as that leading a compute provider with their GPUs for generative AI capabilities. What's interesting is that rather than having NVIDIA being the kind of the leading company when it comes to silicon, I think where their core competency lies is actually on the software side, where kind of their CUDA network and their CUDA platform is quite powerful. But that's kind of the first phase of generative AI. The second and third layers are infrastructure companies, and the third one, interface companies. On infrastructure companies, it's going to be very hard to replace the traditional hyperscalers that we all know very well, companies like Amazon, companies like Microsoft, companies like IBM, and all of these large public cloud providers. But at the interface level, that's where we see the most opportunities. And by interface, I essentially mean how we as consumers and organizations actually experience this paradigm shift. So in the case of generative AI, we believe that software as a service companies like Adobe, companies like Twilio, companies like ServiceNow are really the companies that are extremely well positioned to monetize generative AI features. They're going to easily embed generative AI solutions into their existing solution stack, and they're going to be able to monetize, whether that's 20, 30, 40% more for a premium AI-driven solutions. So I think software as a service companies, from an investment perspective, are really the companies that are going to monetize the most, kind of the generative AI trend.
No, that's such an important point as well in terms of how investors can capture this AI wave, because all eyes have been on sort of the big names like NVIDIA. But as you mentioned, as we see more of the picks and shovels, so to speak, behind this tech, so you see that filtering out as into software as a service. But are there other sectors that are maybe primed for some really explosive growth in the coming years ahead?
Yeah, I think on the industrial setting, we're talking about automation and robotics. I think there's a convergence between robotics and artificial intelligence that's quite clear. And advances in artificial intelligence has always led to significant advances in kind of the robotics industry. I think in the past, we used to talk a lot about digital twins and how robotic applications were growing in terms of speed and efficiency thanks to the growth of digital twins. I think the same is going to happen with tools like generative AI and AI, where it's just going to be so much powerful, the applications that you can have in a traditional industrial setting be performed by this type of robotics. So think about even in the healthcare sector, think about robotic surgery as a great example, where they continue to become increasingly more effective and efficient on these type of even general surgeries, the likes of Intuitive Surgical also kind of leading the way there. So I think, again, artificial intelligence is going to really shape every sector of our economy. And that's why we're so excited about that technology, because it's not only about healthcare, it's not only about financial services sector, it's really a broad impact on our economy.
I think a lot of investors are excited about some of the applications of this technology, and we're starting to see it filter more into our cars as well. So I'm wondering how you're seeing AI technology evolve in the auto segment.
So clearly, autonomous vehicles and autonomy is really going to be a major transformation for our economy. So today, generally speaking, and this is widely, I guess, known by investors today, when it comes to autonomous vehicles, you have these 5 levels of autonomy. Today, mostly speaking, we're seeing kind of level 2 technology being quite prevalent, right? So in here, we're talking about essentially features like lane sensing or automatic braking, for example. Kind of level 3 is a little bit more advanced, of course, but still relies on humans to be essentially behind the driving wheel and be aware to get ready to take over in just seconds. Level 4, however, I think it's where we're going to see that major leap. And it's actually right around the corner. Level 4 autonomy, just to finalize that train of thought, is that you don't need a driver to actually be behind the driving wheel, but it's not going to be able to perform in every single kind of environment. Level 5 would be essentially full autonomous from the vehicle. So level 4 is really right around the corner. We've met with companies like Aurora, we've met with companies like Kodiak Robotics, the 2 leading autonomous trucking company in the industry today. 2024 is going to be a major shift for these companies because they're planning full driverless applications of their trucks. So I think just in the context of autonomous vehicles and autonomous trucks, we're expecting 2024 to really be an inflection point for this type of technology. And again, a lot of this is actually thanks to the advances of artificial intelligence technology that we were discussing before.
Right. And as you kind of mentioned, you're talking about autonomous trucking, and it seems like that area of self-driving is really progressing and maybe the opportunity for growth here compared to some of the consumer side type efforts that we've been seeing.
Absolutely. We always thought that ride hailing was going to be the entry point for autonomous vehicle technology on the consumer side. We're actually seeing that happening with the likes of Waymo. Waymo, for example, in a few cities like San Francisco, Phoenix, and a few others, you can actually try out that ride hailing technology with a level 4 Waymo vehicle. However, on the commercial side, trucking is really going to address many of the market inefficiencies that are specific to the trucking industry, such as driver shortages, such as the fact that you cannot have a driver, of course, driving 24/7, but autonomous trucks can actually do that. And just by doing that, trucking companies in the logistics industry is going to be able to increase kind of their productivity time by 2 or 3 times. So that's going to have major implications in the industry. And just to perhaps finalize a few thoughts here that are very important. In the autonomous vehicle industry, generally speaking, both on the consumer side and kind of more of the commercial side or enterprise side, you have this so-called rivalry between lidars and camera's vision. We get a lot of questions around these. So camera vision is kind of what Tesla has embraced. So you're relying on a lot of your software, your compute, your AI to really solve a lot of those kind of complications of autonomous vehicle technology. And on the other side, you have the heavy hardware approach where you're essentially relying on lidar technology because you have so much fidelity on lidar. So those two approaches tend to be quite important to understand in the industry. Again, Tesla has embraced that camera vision, relying on kind of their compute and their AI. A few other companies like Waymo just take like kind of an all-in approach, and they include not only lidar but radar and camera vision as well. So I think it's going to be interesting to see how those market dynamics play out. And for investors, I think those are very important questions to be asking ourselves.
And I want to take a deeper look at one of the major themes Global X identified, and that is the ongoing EV transition. So, what do you see as the outlook for EVs in 2024 amid softening demand?
Absolutely. I think demand is actually stronger than what many people believe to be just 5 years ago. For context, I think in 2023, we're ending global EV sales at about 14 million EVs. So clearly, adoption and penetration is picking up, again, ahead of expectations that I think we all had just 5 years ago. Yes, we're not talking about those growth rates of 100 or 100+%, but still very healthy growth rates. And by 2024, we're expecting about 70 million EVs to actually be sold around the world. For context, in China, something that it's quite impressive is the fact that almost half of total car sales in China in 2024 are going to be electric. So again, almost half of total car sales. So I think that speaks volumes in terms of the adoption that we're seeing in electric vehicles around the world. Europe is also growing nicely. In the United States, we're still kind of in the mid-teens in terms of a percentage of electric vehicles relative to total car sales. But I think that adoption will continue to happen. For us, it's not a matter of if, but a matter of when. And I think we're on a very nice trajectory, and that's going to open up different investment opportunities across the board.
And Pedro, as more drivers consider EVs, how has the demand for disruptive materials that power our electric cars, like lithium, been impacted? And what other minerals do you think present potential opportunities for investors interested in this space?
That's an excellent question, Alexis. Yes, the reality is that it's very important for investors to understand that not only car manufacturers are going to give access to the investment opportunity for electric vehicles, but in fact, if you look at the supply chain, you may recognize there are going to be multiple opportunities. And you pointed out to lithium. Lithium is definitely the common denominator across battery technology. And by that, what I mean is that you can replace the nickel, or you can replace the cobalt out of a battery. You can try it with different chemistries when it comes to the cathode, but lithium is the one critical material that you cannot replace out of a battery. And that's why at Global X, we believe it's such an important specialty chemical or commodity, however you want to call it, to keep an eye on. For context, lithium demand in 2023 was approximately 1 million metric tons. By the end of the decade, we're expecting about 3.5 million metric tons of lithium demand. Of course, over 90% of that incremental growth is going to come from electric vehicle demand. And that's an area that we believe is going to offer significant opportunities for investors. The same way that lithium is critical for electric vehicles, of course, lithium-ion battery technology is also critical. That's another vertical that we believe is definitely going to offer significant opportunities. And we've seen the fact that essentially all of the car companies that have electric vehicle ambitions are working with the same number of battery technology companies. We're talking about CATL in China. We're talking about LG, we're talking about Panasonic. Here in the United States or the Western world, we're starting to see a proliferation of a few battery companies, but broadly speaking, is a very smaller concentrated group of companies that have actually most of the battery supply out there. So I think that's definitely one area that I would recommend investors to look at.
And we see disruptive technologies can be really exciting, but stock price moves can often be volatile for companies that are in early stages of growth. So, what's the best way for investors to include disruptive tech in their portfolios while also managing risk?
Great question. I think one thing that it's important is that having a long-term approach or investment process when it comes to investing in these disruptive technologies is quite important. So that's number one. Number two, also recognize that this is not going to be 100% of your portfolio. I think thematic strategies and a lot of these strategies investing in disruptive innovation are going to represent probably 10, 15, 20% of your overall portfolio. So I think that's also quite important to understand. And at the same time, I think at Global X, the way we try to provide exposure to these disruptive technologies is through a passive vehicle. And why passive? There's this so kind of called discussion of passive versus active. When it comes to passive, at Global X, we're really trying to provide access to the universe of companies within a specific technology. So if you have a very high conviction in something like artificial intelligence that we were talking about today, you're going to be able to tap into the universe of artificial intelligence companies through our strategies. And that's really going to open up the opportunities to capture that growth in the artificial intelligence segment, regardless of who's going to be the winner and loser, right? So just investing in the universe of companies is going to be able to mitigate a lot of those risks associated with investing in one or two companies. So I think those are three considerations that are quite important for investors.
Well, Pedro, thank you so much for your great insights today. We really appreciate it.
Thank you, Alexis.